Hello, ladies and gentlemen. Welcome to GDMFX's European Session Market Outlook. Here with Martin Panev, Chief Account Executive and Trading Analyst with the company. Starting with the short outlook of what happened yesterday, North American markets. The markets went up in the US, Dow almost 20 points, NASDAQ 50 points down yesterday. The DXY index went up to 98.40. The consumer confidence, 5.3 points better than expected. Chicago Purchasing Managers Index, 5.2 points worse than expected. The GDP month-on-month in Canada, 0.1% better than expected. The Redbud Index back in the US, month-on-month, year-on-year, 1% higher than previous and 2% higher than previous. Basically, we have also house price indexes better than expected. Yesterday, we had Fed's lacquer speech, the highlights of which were consumer spending has increased in recent months, bolstered by improvements in the labor market and in households' balance sheets. The economy still faces some challenges, including the sluggish housing market, potentially weaker exports, and declines in the government spending. The GDP growth is likely to average between 2 and 2.5% during this year, which was a major key point there. Inflation also currently below the FOMC's goal of 2%, in part due to lower energy and import prices. These effects are transitory. However, and inflation expectations remain stable, making it likely that inflation will move back towards 2% by the end of this year. Another key point was given the improvements in the labor market and other indicators, June most likely will be an appropriate time to raise the federal funds rate target. The U.S. Treasury Secretary Jacob Lew, who is in China right now, said that China needs to loosen its financial controls before the yuan can qualify to be included in the International Monetary Fund's basket of reserve currencies. Manufacturing data, along with ADP and employment change and construction spending, are the notes from the calendar for today with regards to the US dollar. Moving along to the European markets, the major inflation data came as expected, but the EU unemployment rate is worsening, and all was visible on the charts immediately. The euro has suffered severely, and the DAX and the CAC 40 have managed to add more to their levels. For instance, the German index gained 120 points up, the French CAC 40 20 points up. In terms of currencies, the euro dollar 100 down, the euro pound 70 pips down, euro Aussie 30 pips down, 120 range, euro Canadian dollar 100 pips down, euro Japanese yen 120 pips down, Swiss franc 50 pips down, and the US, the NSD again lowered. The manufacturing data showed some positiveness already, along with the Swiss Manufacturing PMI, and the EU currencies are picking up slightly today. The non-monetary policy meeting of the ECB is going on as we speak. Something quite important yesterday was the gross domestic product outlook for the UK, which, by the way, was expected to be negative. However, it showed some positiveness. Again, it reflected on the pounds, which picked up some strength. And of course, the FTSE index had a severe decline, 120 some pips yesterday. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers.